Hi, Assalamualaikum. Today, we will present the incoherent in accounting for goodwill implication for a revision of international accounting standard. Our group member consists of Akila Arfa, Muhammad Ahsan, Siti Shahada, and Salutan Nisa. Basically, all these topics will be covered in this presentation. First, as the introduction, the transition toward a knowledge-based economy, the Accounting Standard Board had to overcome several problems relating to the identification, measurement, and control of intangible assets such as goodwill. The main literature by a few scholars have focused on the intrinsic meaning of goodwill and its accounting treatment, such as the initial recognition of goodwill, its amortization, impairment, compliance with disclosure, relationship with market, and method and approaches to determine goodwill book value. There are still unresolved issues related to intrinsic nature and specifically its recognition and duration that need to be overcome by the scholars. Should internally generated goodwill be recognized, and consequently, when recognized, should goodwill be amortized? In order to do so, EFRAG, OIC, ASBJ have provided research on amortization of goodwill. IASB revamped IFRS 3 specifically on the alternative approaches for subsequent accounting for acquired goodwill. Secondly, on the theoretical background. First, intangible theory. It can be considered as the sum of all intangible assets that cannot be specifically identified. Each asset is broken down into its component, to which are then attributed a specific value that is intended to be part of the value of the enterprise as a whole. Secondly, the super profit theory proposed a decreasing discounting process over a limited period of time that corresponds to the useful life of goodwill. Subsequently, super profit theory could not last forever, and the past is no sure guide to the future. Thirdly, the synergy theory of goodwill is related to those business value and business strategy that represent a greater value that held by the firm. Therefore, going concern, goodwill and combination goodwill has been evolved. Overall, these three theories provide complementary contributions to accounting for goodwill. The first two theories of goodwill could not be specifically identified, cannot last forever, while the synergy theory has directed the evolution of the goodwill concept as the premium paid for the business during an acquisition process, with synergies in the form of future revenue, cost reduction, and lower cost of capital. Some scholars mention that goodwill should not be recognized at all. Others argue it should be systematically amortized over a reasonable period of time in accordance with the principle of matching cost with income. Others also recommend that goodwill does not arise just from business combination but also through internal generation process. The third part of this presentation is the treatment of goodwill under IAS. In the International Accounting Standard, the accounting for goodwill is addressed by IFRS 3, IAS 36, and IAS 38. According to IFRS 3, goodwill is measured initially, indirectly, as the difference between the consideration transferred. In this IFRS, it stated that goodwill composed of going concern element of the acquired business and expected synergy from combining the acquired business. IASB conclude that goodwill meet the conceptual definition of asset. IAS 38 define goodwill as an asset representing the future economic benefit arising from other assets acquired in a business combination. It is actually in line with IFRS 3 regarding synergy is created from business combination. We use acquisition method to calculate goodwill. By using this method, we need to know the fair value of the consideration transfer and the net asset. After we deduct, when the value is positive, it is a goodwill. So, subsequent impairment test is needed. But if the value is negative, we consider it as a bargain purchase and put in the income statement. Amortization system has been abolished after the revision of IAS 36. Goodwill need to be tested for impairment in order to know the recoverable amount. Recoverable amount is the highest between fair value less cost to sell and the value of asset in use. If recoverable value is less than carrying amount, intangible asset must be impaired. There are two arguments for goodwill. First, goodwill can only be recognized if purchased as part of takeover. We cannot recognize goodwill if it is internally generated goodwill because it is difficult to compare with the purchase price of the goodwill. Second, goodwill should not be amortized, but we need to conduct annual impairment test because it provides better information.
Now we will look into the recent debate on accounting for goodwill in IASP. In July 2013, the IASP announced the adoption of a comprehensive approach to the IFRS 3 post-implementation review based on two phases. The first on publication of requests for information and second on public consultations and analysis of public comments and extensive outreach and publication of feedback statements. In 2014, a multinational research group comprising the ASPG, EFRAG, and OIC concluded that the introduction of goodwill amortization would be appropriate because it reasonably reflects the consumption of the economic resources acquired in the business combination over the time and can be applied in a way that achieve an adequate level of verifiability and reliability. In 2017, ISP advanced a research project on goodwill and impairment. One of the main objectives of the project was set a duration. At the end, after discussing several possible approaches, ISP tentatively decided not to consider reintroducing amortization of goodwill. Key arguments were that goodwill has an indefinite life by nature. Second, the impairment test of goodwill can provide useful information. Also, investors mainly think that the amortization of goodwill does not provide information about potential future cash flows. The last argument was when using amortization, it is neither easy nor inexpensive to determine the useful life of goodwill. Overall, the debate is still active. Next in presentation is about the incoherence in goodwill accounting standards. Let's begin with insight. Insight concerns the attempt to understand the impact of current IAS practice. If goodwill value is maintained over time, that would mean that the result of several impairment tests are negative. Therefore, two distinct possibilities arise. First possibility is its value has not dropped. This statement means goodwill value from previous business combination is maintained in the financial statements. However, according to both scenario theory and super profit theory, we must reject the first option. The rejection is based on business valuation and strategic management studies. The second possibility is some new value has been created over time. From a strategic management perspective, goodwill as the present value of future super profit is related to the competitive advantage concept from a competence-based view. Firms can achieve a super profit if they have gained a competitive advantage such as a favorable or superior business position that allows them to outperform their competitors. Researchers argue that the competitive advantage is not sustainable without specific actions put in place to prevent or counter competitive pressures. Considering that a competitive advantage by its very nature is expected to be lost over time. Also, we must consider that competitive dynamic unavoidably damage and reduce the initial value of goodwill as recognized in a business combination. Therefore, goodwill does not have an unlimited duration. Now let's move to critics. In hypothesis 1, when no impairment loss has been determined, the firm has internally generated new goodwill, restoring the overall amount of previous reported value. In hypothesis 2, a new amount with no connection to any business combination is considered on the financial statement. IAS does not allow a company to indirectly recognize internally generated goodwill. Therefore, the definition acquired for consideration could be open to criticism because internal generation necessarily involves the incurrence of specific expenses. Now we will look into transformative redefinitions. Find and suggest new conceptual arguments to support the transformative redefinition of goodwill accounting treatment. The focus of standard setters should shift from the best way to make current standard work towards finding new better standards. Redefinition should be based on two lines of actions. First, studies and practitioners projects should be oriented towards an integration of accounting, business valuation, and strategic management literature streams. Second will be standards should cover goodwill recognitions and durations issues together. At the end, standard setters should shift the focus from the question of which is the better method between amortization and impairment to which is the best between the two main approaches on accounting for goodwill. This is because their objective is not to direct what need to be done, but rather to build upon the critics to offer alternative routes. In conclusion, they have identified two internally coherent approaches with reference to goodwill duration and accounting treatment. In first approach argues that goodwill recognition can be achieved only if a business combination occurs. The recognized goodwill should be amortized in a systematic and linear manner. The second approach argues that goodwill recognition can be achieved from business combinations but also through internal generation process. The recognized goodwill should be tested for impairment over time. Thank you for watching the presentation.